Welcome back to the channel. We got a market update for you all. We got a lot to talk about, so let's get right to it. Inflation and interest rates. We were in the green. I have turned those to red. So inflation, we had CPI numbers come out today, and those numbers were hotter than expected, 0.4% increase on all items. And we're starting to slowly re-accelerate again, which is not that good. A lot of this is tied to oil, and oil is swinging all over the place. It's almost at 100, then it's almost in the 70s. It's all over the place. But we see the cost of food, we see the cost of insurance, the cost of everything is going up, and it's starting to re-accelerate again. We have the PPI a couple days ago. That also came out hotter than expected. Where are we at? 2.8. And again, the PPI is the producer price index, so what it costs for companies to make goods and services. I did see this week that Chipotle raised prices again, so it just evidence again that their cost is being higher, and so they're passing that on to the customer. Also, you're seeing strikes all over the place. We've got the auto unions, Kaiser. I live in California, so that's near us. And so again, inflation is red hot. The numbers may not be as hot as they were, but again, all these strikes, in my opinion, are most likely happening because the wages for these workers is not covering their cost of living, so they're demanding more wages to keep up with the rampant inflation. So that is why we turned inflation red. Let's take a look at interest rates. Got the chart here. 30-year interest rates, we've been just chugging on higher here. So this is a 4-hour chart. We had a nice pullback here. I think this might be because of some of the geopolitical stuff going on. And then recently just starting to shoot back up again. This is the 30-year, the 10-year people look at a lot. So not looking good. Mortgage rates higher, cost to borrow higher, things like that. This jump here was due to there's been some bond auctions this week, and nobody wants bonds. Nobody wants bonds at the current interest rate. So the title here, Treasury Bond Auction Runs into Weak Demand Amid Fears that Soaring U.S. Debt Will Overwhelm Wall Street. So the concern is the debt and also inflation. So people don't want to lock up their money for 4%, 5% for 10 to 30 years if they see inflation being much higher than that. There's not a great return there. You're actually losing money because because inflation is going to eat away at those returns. So we're starting to see a lot of bond issuance. We've been seeing that, a lot of bonds being put out in the market because we need to service our debt and we need to service all the spending that we're doing. And we're doing that with our credit card by selling a bunch of bonds. And there's not enough people that are wanting to buy bonds at this current interest rate. And so we may see rates continue to climb. So we're seeing rates go up, but the Federal Reserve hasn't had a meeting and raised rates recently. And that's the market is dictating the interest rates here. So again, that is why we are red. And here is the good old national debt clock. I wish I could get this thing out of the way. But the national debt here, 33 trillion. I was reading something, I can't fact check this, but the US debt is increasing by $1 billion an hour. And our current interest payment is more expensive on a daily basis than the whole TARP program of 2008. So double check those. I may have misremembered those, but the bailouts for the banks in 2008, we're paying more on a daily basis to just service this debt. And again, the higher interest rates go, the higher our debt payments will be because we have to repay at those higher rates. So not good. That's all I can say there. We've got the banks and credit crunch. Again, higher rates. The cost to borrow is going to be much harder. the real estate market seems to be seizing up. One, because no one wants to sell their house to go buy a new house at a higher mortgage rate, and there's just no one that can really afford these prices and the mortgage payments unless you're a cash buyer. So we've got that in orange, and we've got commercial real estate in orange. The banks are reporting earnings tomorrow, so that'll be interesting. I'll be busy this weekend. Rich valuations, I still have green. I haven't changed it. I think there's opportunities out there. Long term, there's some decent opportunities. Some of the big names, big tech, they're not cheap, they're not expensive, they are what they are. But we need to see how earnings come in, because that'll determine, you know, where we stand valuation wise. And that starts this week. So we'll be busy here these next few weeks. The yield curve inversion. So we've talked about the yield curve inversion, and we are uninverting. And this is something to be paying attention to. So here's the yield curve. You want a yield curve that slopes up like this. And recently we've been sloping down, which is not natural. And we want the yield curve to normalize. And we are normalizing. But the only issue with that, not the issue, but the thing we need to be aware of, is every time the yield curve has been inverted and uninverted, after we uninvert, we have these gray bars. That's a recession. So I've got a video explaining that. If you need to freshen up on that, check it out. Let me move my head here on this chart. Oh no, don't do that. So you can see that we were deeply inverted, one of the deepest inversions ever, and we're starting to come out of that. And once we come out of that, we will likely have to deal with some form of recession. We will see. I don't anticipate something terrible, but who saw 2008 and the COVID crash coming? I don't know. I'm sure somebody did. So that is red because we are on high alert to see how things progress there. So the bear case, we know all that, or the bull case, we know all that. Opportunities to look out for, these I haven't changed at all. Cash and bonds, if that's your thing. I've got a lot of money in money market accounts. I like some REITs for yield. Tech and semis dip. Let's talk about it, because there was a dip. Let's look at the chart here. So when we look at the S&P 500, this is our little mock chart we made here with some comments. Last time I saw, we were around here and we had a dip. We had a very nice dip. And in that dip, I scooped up some Amazon. I scooped up some SMH. And I think that's about it. A little bit of VICI. But there was a dip in tech. Let's just take a look at Amazon here. So there was a nice pullback here in Amazon, and there was an opportunity to scoop some up. And who knows where we go from here? We may go right back down. We may blow through this line. I have no clue. I know that I like Amazon in the 120s, longer term, not financial advice. Do your research. But we've had a nice bounce, so I wouldn't necessarily, for me at least, I'm not going out tomorrow and buying. I think we've had a little bit of a dip, and let things settle out and see where we go from there. Selling options, earnings are coming up, so I'm sure I'll be making some options videos for around earnings. Have a plan. I still have my plan down here, things I'm looking to buy right now, long-term holds. So Amazon did that, VICI did that, Tesla didn't get there, maybe it will after earnings. SMH got some of that. I did put in red SHOP and SOFI. I really want to see the earnings, and I do want to buy them at this price. Palantir has just taken off because of the geopolitical stuff, so I don't know if we'll ever see it at 11, but if we do, I'll be there. AMD didn't get a chance. There was a nice opportunity there. It just moved a little too fast. I was too busy buying some of these other stocks. So I think that is about it for today. There's going to be a lot of volatility. There's a lot of things going on in the world. I hope everyone just stays safe. And, you know, don't take for granted what we got going on here. And, you know, when you're having a bad day, just, you know, there's a lot worse things going on in the world. So anyways, that's my little pep talk for everybody. I hope everyone's doing well. But that's all I got for you guys for today, market update. If there's anything you want me to talk about next video, let me know. I will be doing some earnings breakdowns coming up soon. And until then, everybody stay safe. Peace out.